Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Tuesday, August 29th, 2023. Before I click on all the charts, just want to encourage you to please click like if you haven't already. Please become a Wicked Stocks YouTube channel subscriber. Please share the content, if you would, with friends and colleagues. And please check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Daily Apple Report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, the NASDAQ 100, and the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week out to the 3 to 5 month near-term investor. Always looking for 20% swings on those underlying stock moves. Just on Monday, August 28th, we put out a Netflix video analysis you may want to check out. Also know that at wickedstocks.com you can subscribe, and up front you have a 5-day free trial. So you could check out the Netflix analysis that we put out on Monday. Also later in the week we'll be doing another stock pick. And if you don't like what you see, you can bow out within 5 days at no charge to you whatsoever. So let's move on to the charts for Apple. This is a weekly chart that we settled above this 168.50 formation about 3 months ago, maybe a little bit more. And that set off a long-term show of strength. Bullish continuation anticipated in the months ahead to 225.72. Now in the interim, we obviously have the big sell-off that really was indicated below this 184.03 channel bottom. This is a better image of it here, 184.03. Closing below this formation, and we had another sell signal prior to that down to the 184.03 formation. It has been a bit stair-step, but the most recent step that we settled below was 184.03 and climbing. This channel bottom able to contain buying through next week, and once tested, we can fall back perhaps to 168.50 over the following 2 to 3 weeks, where we could bottom out through the rest of the year. And in fact, the sell-off, as I've been saying, or the weakness that's anticipated below 184.03, expecting 168.50, is itself a counter-trend dynamic. There is still this longer-term updraft above 168.50 that may actually prevent a test of that exact formation. We came pretty close to testing it about a week and a half ago and have come off of that area pretty well. 184.03 is really the beginning now of a range of resistance up to 186.67 that we need to close above to set September up as being a bullish month, and I'll get to that in a moment. But 184.03 able to contain buying through next week, and once tested, we could fall back into the upper 160s within 2 to 3 weeks. And not unless we close above 186.67, I'm expecting progressive gains into later September. And I can point to that right now, that if we were to close above 186.67 over the next week or so, we should possibly within 3 to 5 weeks continue into the low 200 area. And that would be indicated. So, in terms of where should I go long Apple at this point in time, if your time frame is 3 to 5 weeks or longer, I would say you're buying a dip at 168.50 or you're buying a settlement above 186.67. It's about as simple as that. Now you could buy a settlement above 184.03 because I think the writing is then on the wall that we probably within a day or two of doing so would close above 186.67, but really is above 186.67 that I think has the sort of follow-through element to the upside that you would want to see, where I would expect aggressive gains as we move through September and into the lower 200 area again. And under that scenario of closing above 186.67, you might reach for 210 out of the money calls that don't expire for at least a couple of months. I think that would be a good play. But until then, especially if you're an options trader, as we move into the mid 180s, 184.03 and 186.67, as we test this area, you might reach for 169 out of the money puts that don't expire for at least a month, because that is the downside play below this area. This area, by the way, 184.03 to 186.67, is narrowing and converges entirely Thursday, Friday of this week. So we may reach that area in that time frame. And in fact, let's jump to this chart right now. I still have 181.12, the high settlement price from last week, That is our intraday pivot point, below which we can ease back to 176.38 perhaps within the day, and above which, pushing our opening today above 181.12, expect 184.03 intraday. I think that is the likelihood. This would be a meaningful rally day today if we push or open above 181.12, 184.03 once again, and I'll say it one more time, the beginning of a range of resistance up to 186.67 that can contain buying through next week once tested, 168.50 attainable within several weeks, and if we close above 186.67, any puts that you might own in the 169 puts, anticipating 168.50, any short play that you're in the midst of, whose time frame is 3 to 5 weeks, my suggestion would be to liquidate, cover that short position, and go long. You might then reach, as I say, you either go long Apple, or you reach for 210 out of the money calls that don't expire for at least a couple of months, 2 to 3 months out. This would be a 3 to 5 week play, 207.09 rising daily. Let's go back to the downside today, that if we do break 176.38, and this is a level, by the way, that may well contain session weakness, and I say that because we're an appreciable distance away from it. So, if we test 176.38 and you're a day trader, you may actually call that the buy opportunity for the day. But if we break 176.38 today, 173.49 is in reach. This former channel top can contain session weakness. We could actually bounce off of here perhaps into later week. And I would say that a settlement today below 173.48 would set us up for a test within several days of that 168.50 long-term channel top, where once again we can bottom out through the rest of the year, possibly well into next. So if we are testing the 168.50 area over the next 3 to 5 days, you may then reach for the mid 185 out of the money calls that don't expire for at least a month. You might go a couple of months out. Once again, I'm talking to options trader. And the last thing I will say is if over the coming days we were to close below 168.50, and I think that is a long shot, but if so, any long position you have in the order of 3 to 5 weeks out to several months should be liquidated, because I think over the following 3 to 5 weeks we will continue south to 154.12, where we can bottom out on a monthly basis, possibly in a later year. But if we close back below 168.50, that will take a lot of steam out of this bullish dynamic that I'm still anticipating above 168.50. I'm going to leave it at that for Tuesday's Apple report. I will leave you with this chart. I think this says a lot for the day. I'll be back, of course, tomorrow with Wednesdays. Please click like, share, subscribe, and check out wickedstocks.com. You have a great day.